And maybe I'm thinking our allocation percentage should be higher. Maybe we should trade 15%, right? And maybe we should trade 2 symbols at a time. Maybe that would actually be a better thing to do. At least that way we're diversifying between 2 symbols, get the top 2 symbols, own those, and do a 15% allocation between those 2. I'm starting to think that that would probably make more sense. Anyways, and then also just generally, why did we lose so much cash? Why did it not perform as well as it did before? That I'd like you also to analyze, please. And then I think the minimum days to expiry, I think should not be 14 days. I think it should be minimum days should be 21, and maximum days could be a little bit more than 21. We can make this go up to like 2 months, right? So anywhere from 3 weeks up until 2 months expiry, any of that is fair game to purchase. So I think we can do that as well. Or actually, no, I take that back. 14 days is 3 weeks. We want to do 3 weeks. Yeah, actually, you know what? No, let's do that. Let's do 3 weeks out, 15% allocation. So we're now buying more of a percentage of the account. But we're buying not just one symbol at a time. I actually really like that. After I've been watching this trade for a bit, that's something that I really like. I would want us to buy more than one symbol at a time because then we diversify. We have a higher chance of hitting at least one of them for the week. And then buying a bigger percentage of the account, which will definitely up the risk, right? And maybe I've actually even spoken to some other people about this. We can have like another risk thing in order where like if the VIX is too high, we can make it just not trade. So for example, that would have been at the beginning of the year, January to March, we had this big correction, somewhere around there, January to April, we had a big correction somewhere in there. If we had a VIX check that if the VIX spiked too much, that we just exit everything, I think that would actually work out pretty well too. After watching this thing trade for a week, that's kind of my thought process. So let's take a look and I'll show you guys why I think that. So if you look at the VIX, for those of you that don't know what the VIX is the volatility index. It is you're using a calculation on options to figure out what is the volatility of the stock market, right? So how risky do people generally think the stock market is, right? You can look at it kind of like what is the insurance that people are willing to pay for buying put options, right? It's kind of what the VIX is, right? So it's an insurance premium. People think about it that way. So when the VIX goes up a lot, we tend to say that the market thinks that things are more risky, right? So let's go back over the past year, and you can very clearly see here, when do you guys think the market was more risky, right? So very big spike in the VIX here, right?